Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to U.S. Markets Wrap with me, Huang. And we've got a bit of optimism in the air with green on the screen. So let's take a look at those numbers. The S&P 500 up 0.3%, breaking above 6,500 for the first time. And we've got the Nasdaq Composite outperforming, rising 0.5%, and the Dow Jones Industrial Average up 0.2% to a new all-time high as well. Well, let's check in now with Sonu Varghese. He is the Vice President and Global Macro Strategist for Carson Group. Sonu, how are you doing today? Good morning.
Very well. Thank you for having me, Ryan. Nice to be back here.
Yeah, it's been quite a month. Lots to unpack. I think there is now a sense perhaps of optimism coming back into the markets, at least going by what we're seeing in the latest session. What do you take away from this?
I take three things, and it definitely is more optimism. I think coming into the month, we had, I would say, less pessimism, but that's converted to, which is not bad by itself. So odds of a recession, for example, have been going down ever since April and May because the Trump administration has pulled back a lot of the tariffs and things like that. But now we have more optimism, and I think a lot of it is triggered, especially after last Friday's speech by Fed Chair Jerome Powell at Jackson Hole. So the rate story is there. And then you have the AI story as well. I mean, you just mentioned today that the NASDAQ outperformed. And a big piece of that is the AI story. And that's actually showing up in the macroeconomic data in terms of GDP growth as well.
Yeah, so let's unpack a bit on the AI story, and that definitely has a lot to do with NVIDIA. It did beat the top and bottom lines when it came to its earnings report, but it also disappointed on its forecast. What do you take away from its latest outlook?
It's, as a friend of mine likes to say, the only sure things in life are death, taxes, and NVIDIA beats on earnings, and top line too. But there is a certain expectation. And every company plays this game. And this time, I think NVIDIA beat, as you said, on earnings and revenue, top line expectations. But, there's always by how much will they beat, right? And they beat by that much. And some of it has to do with things like, they took a big write-down for sales of the H20 chips to China, for example. Now, if you put that back in and sort of compare apples to apples, overall growth was still running, top-line growth was running at an 82% year-over-rate. And that's an acceleration from what they saw in the last quarter, which is 69%. But of course, that's all else equal, but all else is never equal. And so because of the big write-down on sales to China of the chips, H20 chips, that pulled down the numbers a little bit. But still, the big story is that, look, NVIDIA's chips are still in high demand, and I think that's the bottom line here.
Yeah, talking about AI, how much of that is playing out into the economy in terms of productivity and gains?
I would say it's first showing up in the raw economic growth numbers. We just got the second quarter GDP growth numbers that was revised higher. It was revised up so the U.S. economy, after adjusting for inflation, grew 3.3%. A month ago, the estimation was it grew at 3%. And so what changed? Well, in the first estimate, AI spending or investment by companies was underestimated. So that came up even higher. And it was both sides of the AI story, both on the equipment side as well as the software side, right? So that is playing out in the macroeconomic data. I think productivity-wise, we're not quite seeing that yet, but productivity growth takes place over a long time. And for productivity growth to show up in the macroeconomic data, you need broad adoption of AI. And that's going to take not just months, years.
So that's going to be a journey to keep an eye on. Talking about the economy, typically we talk about how small caps are reflective of the wider sentiment and how the economy is doing. And to some extent, it does look like the Russell 2000 is reflecting that because it has outperformed the other benchmarks this month so far, up by 7.5%. What does that tell you in terms of where the economy is going and where the investor interest is hitting?
It tells me immediately that it doesn't look like investors expect a recession or a big slowdown in the economy. I mean, it doesn't mean that, the U.S. economy is going to grow at 3% like it did in 2023, 2024. But still, relative to where we were 2, 3, 4 months ago, especially after Liberation Day in April and tariff chaos and all of that, we seem to be in a better place. And I think that's reflected in small cap outperformance. Or like, as you said, the Russell 2000 is up 7.5% over this month. There's one more trading day left to go, whereas the S&P 500 is up 2.5%. Now, 2.5% is not bad, right, Ryan? Just for 1 month. But the fact that the small cap index has accelerated way above that is telling. And then I think the other side is the Federal Reserve. Investors are now pricing in a whole slew of interest rate cuts between now and the end of 2026. So over the next 16 months, investors are now expecting about 6 rate cuts. And versus even 4 months ago when, the odds of a recession was much higher, investors are pricing in just 4 rate cuts. Through to the end of 2026. So that is, policy has gotten more dovish. Meanwhile, economic optimism has increased. That's bullish.
Yeah, it looks like markets are adjusting to these new realities. So with that in view, are you seeing perhaps a change in terms of leadership when it comes to what's going to be the next big thing or where investors should be heading? How are you advising investors to adjust their exposure or portfolios right now?
I mean, part of it is we have been overweight equities, and we were overweight equities for the last 2 years. But coming into this year, and even after April and the tariff thing, all of that, there were questions about should we still be overweight equities, and we maintained that. We were never in the camp that there would be a recession. But one move we've made over the last, even before April, this was back in January and February, we became more globally diversified. Right. And you see that in global equity markets, which are also hitting new all-time highs, whether you look at Asian equity markets, European equity markets, all of them are actually outperforming the U.S. indices. So we've been globally diversified. But at the same time, we also like to diversify our portfolios with things like gold and managed futures. We think we may still be in a relatively inflationary environment, and we want to protect against that.
All right. Gold has been doing well. Talking about being diversified, which markets are pulling you in right now? Which are the better places to look at these days?
It's broad across the board. We are, close to, I would say we are slightly overweight developed markets and slightly underweight emerging markets. And, Chinese markets have been doing well, but we still see some issues related to the property and real estate slowdown. So from a fundamental perspective, we don't want to place all our bets onto China. But we are overweight equities. Just by the nature of that, we have more exposure to global equities across the board. So Europe has been doing particularly well as well, whether you look at places like Spain or even places like Greece and Poland, for example, right? So those markets have been doing well. But we have exposure across the board. And as I said, we've been overweight equities. So we have more exposure relative to our benchmarks.
All right, stay globally diversified. And there's been conversation with Sonu Varghese. He is the Vice President and Global Macro Strategist for Carson Group. Sonu, always a pleasure having you on the show. Thank you so much for your time and insights.
Likewise. Thank you, Ryan.
All right, we'll catch up with you again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.